moment changed everything for you and how you see money and wealth creation?
Money comes and goes from my point of view. I was always scared taking on loans and buying investment property and this and that and having a debt. But then recently I've seen that in Australia, if you manage your finances well, you can build wealth through property.
What is from your experience, the mistake you see people make over and over again in trying to grow or increase their wealth or money?
Most of the times what I've seen is people put in their mouth more than what they can chew.
What does that mean?
If you're making $100 and you're spending $120 because you're using bank's money or credit cards.
Are you against using credit card?
If you use it wisely, it can actually help you.
How can someone use credit card wisely?
Consider it as your money and not the bank money. The trust doesn't pay tax. Profits are distributed to the individuals, and then the individuals pay tax at their rates, marginal tax rates.
Okay. You're being penalized to earn more.
Correct.
Why is it so?
It's a marginal tax rate. It's always been that way. The more you make, the more you pay.
Why did you decide buying a franchise? Why didn't you start from scratch? Nirav, how are you?
Good, thanks.
How's your day been?
Emmanuel. Yeah, busy day, man. Crazy day.
For someone that never met you before, that do not know who you are,
Okay.
all right, and they've tuned into this podcast, what would you like them to know about you?
I came here when I was 18. And I had one goal in mind, to do something for myself, and to make sure like I can be able to help the people behind me who are looking up to me, like my family, my siblings, and I studied accounting and tax law, 3 years in uni, and then I did my chartered accountancy course. Once I finished my CA, I thought I'd explore the professional world to see what I can get out there. It was very hard to get a job as well, because I wasn't the type who could talk. I was just behind a desk, and on paper, I reckon I was good, but verbally, it was very difficult to go through those interviews. And then I started doing part-time jobs like bookkeeping and so on, just to gain that experience. 10 years ago today, actually October, 2015, decided to start my own business with the accounting firm, of which you're aware of. You've been my client for almost, 6-7 years, even more.
More. So it's not 17.
Yeah, there you go. And we started the business with no clients. And we set up the furniture, the computers. We bought a $8,000 printer, but nothing to print because we didn't have clients. And we spent a lot of things in marketing. Coming to about me, I was finding it very hard to communicate with people. So what I started doing, I started reading a lot of books. I can see one of them at the back there. I started reading a lot of books. I started going out a lot, alone. And that made me open up, gain my confidence. Every Friday night, evenings, I'll just go out, breakfast meetings and so on. And that built my business. Because putting money into advertising at that stage, initial stage, was just going down the drain. So the best way was to have a good suit and to get out there and to just talk to people, just be genuine, just be yourself. And 10 years later, here we are. We've got a good accounting firm practice. We are hoping to purchase other accounting firms if they come through. And it's been 20 years I've been here in Australia. That's what I can say. Otherwise, I'll keep going. Yeah.
You've had quite an interesting career. So I wanted you to tell the audience who you are, all right? It will give credibility to a whole lot of conversations we're going to be having today, all right? What do you do on a day? What's your day-to-day?
Right.
What experiences you have?
Right.
Some of the industries you've worked or clients you've worked with, without mentioning specifics, you can generalize.
Yeah.
And some of the big breakthroughs you've had as an accountant. So I wanted to lay a foundation for a lot of things we're going to talk today, because we're going to go into bonds, investing, and all those stuff, which I know you're quite experienced in. But for an audience to listen and believe you, they need to understand who this person is.
Right. So on a day-to-day basis, we help, obviously, because we're an accounting firm, we do a lot of tax returns, so individual tax returns. So Australia is a country where the tax system is complicated, yeah, and people need, the public need people like us to get their taxes done. And Australian system is based on trust. They trust you to do the right thing by lodging your tax return. In addition to the tax return, we provide business advice, such as if you want to set up a business, what should you do? Where can you start? Where should you start? Yeah, there are different type of structures. When you want to start up a business, we go through a series of questions to make sure we've set up the right structure for you. In addition to the structure setup, we can help the client with their bookkeeping needs, because not everyone is accounting or bookkeeping savvy. The systems out there, they might not be easy to use for some clients. We also teach the clients how to use the systems, because when you're starting a business, cash flow is tight, yeah, and we can teach you how to use the software, and you do the basic stuff. So then when we come in, we can clean up your file, do your quarterly lodgements. So we've got the tax return side of things, we've got the business setup side of things. Once you're up and running and you're struggling either to make money or you are making money, both have its pros and cons. When you're struggling to make money, we can help you strategize. We can analyze your books and say, you're paying too much here, you're not charging enough, your hourly rate is too low, you need to increase your prices. Secondly, when you're making a lot of money, you have tax problems. So we do tax planning for you and so on, just to see what your tax bill is going to look like when the EF closes. So we do all this, we provide all these services for a lot of different industries. For example, manufacturing industry, coffee shops, restaurants, hospitality, medical, dentists, physiotherapists, film studios, legal firms, service industries, even the mums and dads, the sole trader businesses, tradies. So we have a vast experience with all these industries. And barbershops is another one. We help a lot of barbershop clients. So being in different industries also help our clients, because we can refer genuine work to our genuine clients. When the different industries, so there's different type of structures. So every structure is different.
I'll come to the structure, okay? Since you've laid the foundation, I'll go back now to where you started from, the journey, from coming into the country, as well as building up to where you are today. If I were to ask you, what moment changed everything for you and how you see money and wealth creation?
Money comes and goes, from my point of view. And how I see money is, that's a good question. Never thought about it, but in my mind, I always be like, it's okay. We'll make it another day. It's okay. If you've spent it here, or you've spent too much here, or you've helped someone, I always have the mentality of, it's okay. We'll make it another day. Yeah. So that gives me the drive to wake up in the morning and make it another day.
And what if another day doesn't come? So you've seen people make money and lose money.
And lose money.
And sometimes they don't recover.
Yeah, that's true. So if you are my client, and I'm tracking your business or your finances monthly or in a quarterly basis, you will be warned. For example, I'll be like, your rent's too high, or your sales are not enough. You're paying too much in advertising, but you're not getting any results. Have you had a chat to your advertising guy? So coming back to your question, how it all changed was, obviously you've seen the highs and lows of money. And when you don't have any money and it's hard to pay the bills, and then when you're servicing all these clients and money is pouring in, but you got to manage it, and you can't just, you have to have a tight leash on your finances, because the mentality is, when you see money pouring in, you want to buy all these toys, and then come tax time or come lodgement time or come rainy days, you're struggling. Or you lose a big client, you're struggling. So I would say you have to be grounded. You have to be grounded. You have to put money aside for a rainy day.
What moment changed everything for you? So you went from working to starting a business.
Yeah.
Why did you decide, okay, I don't want to work for Mr. A, I want to run my stuff? What was that defining moment for you?
It was always there. That moment was always there. It just happened. I'll explain to you. So my dad runs a business as well, and I've seen him support a lot of people, a lot of families, and helped a lot of people. And I didn't want to be, not in a bad way. I didn't want to be part of that, where he has to help me out as well all the time. So that's why I decided to come to Australia and do my own thing. So he called me one day, and my brother as well, and he said, one of you, do you want to come back and run this business, or should I shut down or just handle what I can? And that's when me and my brother decided someone has to go back home to run my dad's business. And he decided to go back home because I already had a job. I had my siblings still in uni. And as time went by, when I was at work, I like same day, same stuff, different day, same stuff, different day, and it was getting to me. And I was very, very persistent in doing something different. I was reading a lot. I even almost signed up for a sugarcane business just to sell juice. I looked into buying a coffee van. I looked into getting into the food truck market. And then I met my business partner, Durgesh. And we were in uni together, we've studied together, and he's like, man, even I'm looking for something. How about an accounting firm? I'm like, yes, it's not a one-man's job if you want to grow it. And that's where it all started. The way I look at it, because I think I was persistent in searching all the time, sleepless nights, what am I going to do? What am I going to do? It came. And that was the turning moment for us.
Why did you decide buying a franchise? Why didn't you start from scratch? Because I know you guys used to be tax store.
Yes.
And now you're now
Yes,
you're off that
independent.
franchise now. Yeah.
So, because I was working in the commercial sector, and so was my business partner, to get a practice license, you needed to be working in practice. You needed to be working in a firm, or you needed to have a mentor for 1 year in order for you to practice. And nobody would give us a license to practice because we didn't have these two things. And that is why we went through the franchise part, and we met the franchise support system on IT and all the knowledge and all the soft skills that are needed through Taxto. And then eventually we stuck with them for 10 good years. I think we paid our dues. And then we decided to go independent. And that is why we went through the franchise.
Why couldn't you have continued with the franchise? What's the benefits of running your stuff? Of course, I understand the control and things like that from a financial and revenue point of view.
Obviously, from a revenue point of view, if you're using somebody's name, you got to pay them royalties.
Okay.
Not in a bad way. We didn't have a issue paying those royalties because we were handling everything. They trusted us to the point where they say, you run the firm the way you want to run it, because we know that you're going to do the right thing by us. And we paid the royalties and so on. And the trigger point came when we wanted to acquire. So like, okay, if we acquire $1 million firm and I have to pay X% royalties, it's going to be a big pinch. Yeah. And so that's why we decided to go independent. Because even with the franchise, not even with the franchise, with anyone, I'm not bound, or we weren't bound for life. Yeah, everybody, even marriages don't last that long these days. So, which was, and it was a very amicable decision. Both parties shook hands in a good way, and we parted ways. And just recently in September, we rebranded to our independent Starrise accountants. Yeah.
Thank you. Look, you've worked with a number of people in the course of your career.
Yeah.
What do you consider one mistake you see people repeat over and over again in trying to grow their wealth or their money?
Everyone is different, Emmanuel. Everyone is different. Everyone's life circumstances, business position is different. So we tailor our advice based on you. For me to give you a specific reason would be very difficult, because your doings have resulted to your financial. So
I'll let you know why I asked that question. So you see, the human race, it's structured in a pattern.
Correct.
All right? People behave in certain
ways.
ways. If you take 100 people, 50% of this, in fact, 80% of those people will behave the same way.
Yeah.
All right? The other 10%, perhaps, and then the top 10% will behave differently. Those are the outliers. But 90% of the time, you're going to have the same people making the same mistakes. I'll give an example. Stats shows that for everybody that won a lottery, they lost it
They lost it.
in less than 10 years.
Yeah.
And there are many people that have won lotteries.
Yeah.
So it means we all behave slightly or probably the same. So going back to that question, what is from your experience, the mistake you've seen people make over and over again in trying to grow or increase their wealth or money?
When you start something, the client's best interests. But when you deviate from that, yeah, where the client's best interests are not anymore important, I think that's where you lose.
So you're talking about personal finance. So this is more a personal finance question than a business.
Personal finance.
Yeah.
Ooh, that's a hard one. With personal finance, I reckon most of the times that what I've seen is people put in their mouth more than what they can chew.
What does that mean?
What I mean by that is, if you're making $100 and you're spending 120, yeah, because you're using bank's money or credit cards, and then you're always running behind.
Are you against using credit card?
I'm not against using credit card. If you use it wisely, it can actually help you.
Well, how can someone use credit card wisely?
Consider it as your money and not the bank money. So,
okay, explain.
For example, the way I use it is, I've got a 4,000 limit, for example. Yeah. If I've spent 1,000 today, by next week I'm going to pay off that 1,000. So my limit is always going to be 4,000. I'm never going to go minus 4,000 and then try and repay it, because you're getting charged interest. You have other bills on the side. So I would always be on top of it rather than.
So why then consider it your money? Because it's not your money; it's the bank's money.
Yeah. So you've
you're
got
gonna repay it.
Yeah, you've got 1,000 in your bank.
Yeah.
Yeah, but you're using thousands of bank money. Yeah, if you don't need a credit card, you don't need one, because you've got the money aside.
Yeah.
Yeah, you can use your credit card, top it up.
Why do you think people go? Because credit card is a major problem, if you understand, in this society. Why do you think people go for credit cards? Because the marketing is really good.
Yeah.
So why do you think people still fall for this
It's
thing?
a very good question. If you look at it at a business point of view, yeah, and not everyone will give you 30-day, 60-day terms, but the credit card will. So when you buy this mug for $5, the person you're buying it from will get paid on the spot. However, because you've used your credit card, yeah, the bank is giving you 55 days to pay off that $5. So you're buying time, which is a good thing. Yeah. Plus the benefits of the point system, all these perks you get when you have a credit card, like frequent flyer points. I haven't really looked into much with the frequent flyer points, but with the point system, the more you buy on your credit card, the more points you get, and then you get all these freebies when you can redeem it. So yeah, so buying time. You see, they've bought 55 or 60 days, depending on what product you're using. Nowadays, there are plenty of products the banks are offering. You're buying time to pay off that $5 because you don't have that $5 today, but you're expecting to have that $5 in 10, 20 days so that you can pay off that.
So, in your opinion, one of the advantages of using credit card is it helps you buy time.
It buys you time.
What if you don't need that time? What if you don't need that? Because we've seen credit card encourage a lot of impulse buying, which is where the problem actually starts coming from. Where, because you got a credit card, you've got, 1,000 in there, as everything looks like.
Yeah. So again, you're not using your money, you're using your bank's money, and you don't have that money sitting in your bank. The benefit, yes, buying time. Yes, it gives you all these points and perks you can redeem. Other than that, I don't see any benefit of using a credit card. Because, again, to get a loan from the bank will be quite difficult for a startup business or a business that's not making money. But to get a credit card, it could be easier. Yeah, and I'm not saying you can get it. What I'm trying to say, it could be easier to get it rather than getting a loan to finance your business.
Thank you. Good. I'll quickly go into investing. All right. So if you explain to me like a child, so assume I'm a 6-year-old, a 5-year-old child sitting in front of you, and I'm asking you questions around stocks, bonds, the S&P 500, and the stock markets,
Index, yeah.
the index funds. And can you explain to me like a child what is stock, what a bond
I
is?
can, like, with my experience
Yeah.
and with my business, we don't have the licenses to tell you where to invest or how to invest or what you should do to invest. But I'll give you my experiences. Stocks are basically the shares.
Okay.
That's my understanding. Yeah. You have the blue chip shares like the ANZ banks and the all these where you can buy these shares for a price, hoping that the value will go up and you'll sell at a higher price, or where you can earn dividends through those shares. So dividends is basically profit after tax is paid. Yeah, and if you are a 50% shareholder, you're entitled to that profit after the tax is paid in the entity. So those are shares on its own. Regarding the stocks, these are basically shares you're buying of other companies.
I would leave investing. I'll go to my next set of stuff. I'll go to super, because I know you're good in super.
I try to be.
Yes. Good. All right. So now, for many of us, we don't know what to do with our super. It sits there. But I understand there are quite a few things we could do with our super. You know, are there better ways we could utilize our super?
So with super, it's basically your retirement. Yeah. The more you build up as you go, the better for you when you retire. Because we don't know when you're going to lose your job. We don't know how long you're going to work for. So this is the money people try to put into their super. Obviously, if you're working for someone, your employer is going to put, at the moment, it's 12%. You can put additional if you want. And every year the cap changes. So at the moment, it's 30,000. So let's say if your employer has put in 12,000, you can put the balance 18 on top, and you can claim this as a deduction if you want. Otherwise, you can put it as after-tax money, which is also called non-concessional contribution. And you can use a financial planner to help you invest this super money into stocks and bonds and so on inside the super. So your super is making money as well. And the super tax rate is 15% at the moment. So super can help you as you go, as you get old, as you retire. It's kind of a saving, because otherwise you'll be on Centrelink, or you'll be struggling to pay bills when you get old. So super money is there to help you like that.
Can someone build wealth through super?
You can. You
How?
can build wealth through super. So if you keep topping up and you've got enough super, you are investing through your super, through bonds and shares and so on, or cash, or you can just leave it as cash. So it's also investing inside your super, and it's growing in there. And sometimes people also use that super and set up a self-managed super fund. But there are very stringent rules. They need to see a good accountant or financial planner to advise them whether it's viable for them to set up one, because the costs involved in setting up a self-managed super fund is quite expensive. The self-managed super fund is basically you are managing your own super. You are investing your own super. So you can set up a super fund, roll over those funds, and you can invest in whatever you like that will make money. However, it has to comply with all the standards and all the laws and the financial planning laws and the tax laws. And you can build your wealth like that. So, for example, people, and it's very common nowadays, where people would buy their commercial premises where they're working from under their super, where their entity is paying the rent into their super. Instead of paying an external party, they own the property under their super, and your company or your business is paying rent to the super. And you can do that by having a self-managed super fund, and that's how you grow. You can buy, sell, you can do stocks, similar things what you can do in a normal industry fund, super fund.
So you have your super,
Yeah.
you have what, 10, 20, 30, 50K in it, and you decide, okay, I don't want this money sitting just here. I want to do something about it. How do I go about it?
Two things. You can either go see a financial planner and they can work out a plan for you on how to grow it or how to put more into it in order for you to grow that 50 grand to a million or so on. Another option is, which I wouldn't suggest you do it because 50 grand is too low to set up a self-managed super fund for you to do it yourself. Yeah. Purely because the costs involved in setting up and running the compliance involved, the tax compliance, the ASIC compliance involved in running a self-managed super fund is quite expensive. So you want to get good advice when you. And rule of thumb is 200 grand.
Minimum.
If you have 200 grand in your super, you can probably set up a self-managed super fund, but again, it's best if you see someone specialized in this. We help with super funds in the compliance side of things. So preparing your tax returns and your financials and helping with the audits. So the audit is independent, so we'll liaise with the auditor and to make sure the auditor and my reports comply with the standards and with the ATO and ASIC and so on.
Okay. But the investment part of it, you
No.
no. Okay.
Yeah, so I wouldn't have a clue.
About that.
Yeah.
Cool.
But I've seen clients, they invest in property, they invest in shares, paintings, and so on. Yeah.
Using their self-managed super funds.
Yeah.
For an individual or a business considering investing,
In real
in
estate.
real estate, what's your thought rather on investing or buying a home first or investing in
Investment property.
investment property? Yes.
I would say invest in a business before you do anything. But to answer your question,
Why do you say so? Then we'll go to the question.
because you're going to put now, in fact, the property price is expensive, like 800,000 for a small home, 700,000 for a small home. If you are always looking to start something of your own or a business, I would start a business, and if you focus and you do the right thing by your clients, by yourself, you'll easily be able to buy a house.
As an investment property or a home?
Either.
Okay.
Investment property, everyone is different, Emmanuel. Everyone has different goals. Some people want the passive income. Some people want a home for themselves. So everyone's goals are different here. Personally, I would say you can do both. If the bank or if you have the funds to do both, it's a good thing, because property prices are always going to go up. We've seen it in the last 2 years. It's gone up drastically, and if you want to keep and rent and have that passive income, that's up to you. If you want to buy and sell, that's entirely up to you again.
From a business standpoint, an investment standpoint, what would be the best route?
Having an investment property,
Why so?
because you're building an asset. You're building an asset. The value is going to go up. You're going to earn rent from it. You buy at the right time in the right location, and so on. What I've heard and what I've seen with my experience is, if you buy a house next to a school or the freeway, it'll rent. The property price will go up. And from an investment point of view, if you're an investor, yeah, you buy property. Not only in this country, in any country, you can buy a property, because the property values will go up eventually, and like we've seen it in the last 10, 20 years.
But what's something you've changed your mind about lately regarding investment?
I was always scared to just taking on loans and buying investment property and this and that and having a debt. But then recently, I've seen that investing in property is not a bad thing. I was always not scared. I don't like debt. Yeah, so.
As an accountant.
Yeah, I don't like debt. So, and I was like, oh no, I want to pay off my house. I want to first pay off my investment property and then go for another one. But in Australia, that is one way you can build wealth. If you manage your finances well, you can build wealth through property. And property prices, like I said, like if you bought ages ago and you sold last year, the rents are crazy at the moment. So you'll always make money, and you're hoping that the rents cover your interest payments, your council rates. If they cover that, that means your property is positively geared. And that means you don't have to remove any money from your pocket to fund that investment property.
What is positive gearing? For someone that might not know what that is.
Positively geared means if you have a mortgage or not even, as long as the rent received is paying off your rental expenses such as water rates and council rates, pest control, your insurances for the property, and then your rental income less your expenses. If you're in profit position with your rental property, that means you're positively geared.
And if I'm not?
That means you're negatively geared, where it also depends. If you're negatively geared, then depending on the structure you have bought your property under, for example, if you buy it under your personal names and you're negatively geared, where your rental income is less than your rental expenses, that means you've made a loss. You can offset this loss against your other income, hence can result to a bigger refund or so on. So that is negatively geared.
And if I structure it incorrectly, what would an incorrect structuring?
There's no incorrect structure. There's different structures. So because people buy properties under their self-managed SuperFund, as mentioned earlier, They buy properties under the trusts or companies. Yeah. So every entity has its own rules and regulations on what you can and can do in terms of whether it's positive or negatively geared. You see? So for example, if you buy a property under a trust, there's much more involved, but in basic layman terms, if you make a loss, that loss is carried forward. You can't offset it against your normal income because it's a trust. You've bought the property under a trust or a company. Yeah. Versus if you buy it under yours, you can offset that income, that loss against your income.
Okay.
You see? In a trust, if it's a loss, it gets carried forward. And then you can offset those losses in the years when you make profit.
And if you don't make profit?
You lose out.
You lose out.
But then if you sell, there will be a gain, maybe. If you don't gain, then you lose out on that.
So if you sell and you made some profit, you can then offset
the
losses over.
Yeah.
You've mentioned trust. I wanted to understand, what is a trust as well? In comparing that to a normal limited liability company.
Okay, there are a few structures in Australia. One of them is you being a sole trader. One of them is having a trust. Trusts, there are various type of trusts. There's a company. So these are the main structures people use to set up a business. And with your sole trader, I always tell my clients who don't understand the structures is income less expenses is profit, you pay tax on the profit. Trust, income less expenses, any profit can be distributed based on if you meet the requirements of the law in terms of who you can distribute and how you can distribute and so on. You can spread your profits to your family and pay less tax. In a company, income less expenses is profit, you pay flat tax of 25 or 30% tax. And those are the three main structures people use to set up a business.
Why would I want to set up a trust instead of a company?
We look at a lot of factors. Who's in the family, what kind of business it is, and then there's also different type of trusts. Yeah, various types of trusts, unit trust, trust with corporate trustees, normal discretionary trust. There are quite a few. So based on the number of people in your family, what they do, how much they earn, what kind of business you are in, yeah, we would suggest one or the other. And we would tell you the pros and cons of, once we tell you the pros and cons, you'll easily know which structure to set up your business under.
I'll give you a scenario, and then maybe you can respond to that. So I'll use myself. I'm a man. I've got a wife. I've got 2 kids, 7 and 4. Okay? And I come to you. I've got an idea. I've got a property I want to buy, but I don't know how to structure it. Okay? What questions would you want to ask me to help understand how to advise me in that light?
Okay. Some of the questions will be like, okay, what do you do for work?
I run a production studio.
You run a product. What are the risks involved? We look at all the risks. What are the chances people can sue you, or do you have your insurances in place in your studio and so on? Yeah. So based on the risks, we can then advise on, okay, based on these risks, I suggest you set up a company or a trust. However, a trust, when you buy a property under a trust, you have these benefits, like the 50% capital gains discount and so on. We look at how much money you're making. What are we project your tax based on the money you're making today. We look at your spouse or your children's income streams. Yeah, because there's no point being in a trust if you're already on high income. However, if you're buying a property, it could benefit you, because if you're looking to sell that property or looking to retire, or if your spouse is looking to leave her job, see, we have to look at the goals. What are your goals? And based on that, we tell you, okay, we can set up a trust.
You made a statement now, there's no point being on a trust if you are on high income. What does that mean? Is it trusts are not for high income, or trust is for those within certain income brackets?
So the trust doesn't pay tax. The money has to be distributed to the beneficiaries. If you do not distribute, then the trust pays 45 or 46% tax.
So beneficiaries are either the children or
Yeah. the
trustees.
spouse, yeah, no, the beneficiaries of the trust.
Are they
So
not the
which ca-
trustees?
No, the trustee is someone who basically handles the transactions
Okay.
of the trust.
Not the beneficiary.
Yeah.
Okay, cool.
So, for example, if your business has made 100,000 in a trust, and if you're eligible to distribute, and you have 4 people in your family, yeah, and if they're also actively working in the family, you can spread that 100,000 over 4 people and paying like 19% tax rather than paying 32% tax.
So what should I consider first before considering a trust? Is it the risk associated with it? Because if I were to run the company, so I look at it, so a limited liability company means, for me as a director, the company is an entity on its own.
Yeah.
I can't be sued. If the company does stuff, the company will be sued in such a way. I mean, in some, in
that's
some way,
how
shape, or
people
form.
see it.
Yeah.
Yes.
Well, of course, you can't be sued because you're the one responsible.
Correct.
But the company in itself is an entity, all right, on its own, if I understand that structure.
It has limited liability.
Not like it
Yeah.
doesn't have any at all.
Yeah, so what that means is the company is liable for its own debts and so on. However, you could be seen as negligent,
Okay.
and that is why it has resulted
So that.
to these losses or these debts. So there's a lot more to it than just a limited liability. Yeah.
Okay, I get the gist. Now, put a trust in there.
Yeah.
Okay. What are so for what you just explained, that the company has limited liability, which means, it can be sued.
And that's why a lot of people set up trusts
Okay.
with corporate trustees. What that means, the trustee, the person who handles the transactions of the trust, is a company, is a corporate entity that has limited liability. So you can have a trust and you can have a holding company to manage your risks.
Okay. So
that's a different type of trust.
So I've got trust up here. I've got a holding company,
Yeah.
Beyond Studios, for instance.
Yeah. So basically it'll be, let's say, Beyond Studios Pty Ltd as trustee for Emmanuel Family Trust.
So what benefits legally does that hold?
Legally, it works similar to a limited liability company because you've set it up that way by having a corporate trustee in it. The only difference is the trading entity, the one with the ABN.
So that's Beyond Studios.
No, Beyond Studios is the company.
Okay.
Yeah, as trustee for Emmanuel Family Trust.
Okay.
So Emmanuel Family Trust is the one that holds the ABN.
Yep.
And that is now the trading company.
Okay.
Yeah. It makes it limited liability because you've got the trustee as a company. It's not an individual.
Okay.
You could be the trustee, but then you are equally liable. But now we've inserted a risk protection mechanism, which is the corporate trustee.
Okay, which is Beyond Studios.
Correct.
Yep.
Yeah. And that, you have the benefit of both now. You're protected and you can distribute your income if permitted, to your family members.
So I'll come back to this question. So I'm there because I need, personally for me, it's a question of, it's something that's puzzled me a lot. As a business person, you understand what I mean? All right. So I've got,
Let me start my timer.
it's all right,
So I
start your
can-
timer.
so I can
Start charging me,
so
right?
I can start charging.
Now you know why I got you here, right? So good. I've got Emmanuel Family Trust Pty Limited.
Correct.
All right. He does what now? Let's say he runs a mining company. Okay, for instance. And that mining company operates a mine in Iluru or Iluru, one of those, regional outback countries.
Yeah.
And for whatever reason, Emmanuel Pty Limited gets sued. What's the protection there? So I'm creating a scenario. This is like just. So I'm talking about, you did mention it's protected again. So I wanted to understand where does that protection come in? I understand the tax bit.
Yeah.
Yeah.
So you obviously, it depends what you're sued for. You've got insurances in place. Yeah. It could be debts. You could have debts, but it depends what you're sued for. The corporate entity, which is the Beyond Films Pty Ltd, is the limited liability entity. And that's the one that gets sued, not Emmanuel.
Because he's a trustee.
Correct.
Of these guys.
Is the trustee of the trust.
Yeah.
And basic definition is it handles the transactions of the trust.
So would you advise, General, don't mind, I wanted to put that, would you advise people on a general, from a general perspective to consider a trust instead of a company, or a company instead of?
Oh, yeah. We would advise that based on your circumstances, I think we should go with a company, or we should go with a trust and a corporate trustee, or there's even a unit trust. If you've got more than one person, like let's say you and your friend want to set up a business, you could set up a unit trust where you could hold 50 units and he could hold 50 units. And then the profits can be shared 50-50, just like a partnership. Yeah. So we do advise clients. We look at their scenario. We look at their circumstances. We look at the type of business they are involved in. And then we would suggest, okay, if it was me, I would set up a company because of blah, blah, blah. Or if it was me, we would set up a trust with the corporate trustee because of this. But that doesn't stop you from changing your entities in the future. If you're trading as a company today and you want to roll over a trust, you can change that business into a trust.
Give me some. So let's use the Beyond Studios and Emmanuel Family Pty. So Emmanuel Family Pty is the one you're referring to now that can be rolled over, or the trustee handling the trust?
I'll give you a basic example based on your scenario. Let's say your profit is sitting at 500,000, and you're the only person in that trust because your wife is probably on a high income and your children are under 18. The whole amount would be probably distributed to you in your tax return. So that 500,000 would probably hit your tax return. Yeah, and then you pay taxes on that 500,000, which is 45 whatever percent. Yeah, if you're at that stage, then we could recommend changing you to a company where that 500,000 will be taxed at 25% rather than 45%. And so on. It's more complicated than what I'm telling you, but there are circumstances where we've had to change the client from one entity to another. Most of them move from a sole trader to a trust, or from a sole trader to a company, and so on. Depending on your entity and your plans, we can help you roll over. It's called a rollover.
I've got two questions and we'll be wrapping up.
Yeah.
A trust, does it have to be with your children and immediate family? So we've talked about family trust, for instance. Like
Yeah.
the concept of a trust, is it all around, centered around, or trying to distribute profits?
Correct. So there are different type of trust. There's discretionary trust, which is same as a family trust. Yeah, you wouldn't want a third party in that trust. Then you'd rather set up a company or a unit trust. Yeah. But if you read the basic trust deed rules, there's a lot of things a lot of beneficiary that automatically fall under you. Like, for example, even if you don't mention them, your brother, your mother, father, your sister, they fall under the beneficiaries in your scenario. Yeah. So you could distribute to anyone you like.
Even if they are not mentioned in that trust?
Yeah. Because automatically, yeah, anyone related to you in terms of mother, father, sister, brother, children, grandchildren are automatically
Members of the trust.
correct. Not members, beneficiaries.
Beneficiaries of the trust.
Yeah.
So if I understand this, the whole idea of a trust is to help distribute whatever profit or income amongst the children in order to reduce my tax obligation.
Yeah.
That's
Everyone's tax obligation.
it's all about tax obligation,
Yeah.
reducing the tax
But then
obligation.
You have to, there's criteria to meet in order for us to
No,
just
absolutely.
distribute it
Absolutely.
to your wife or
But
to
the
your
whole
children.
concept is all to
Yeah,
minimize
yeah,
our tax
correct,
obligation. That is all.
Correct. But then if the business is making too much money and the profits are really high, then everybody will be on a high tax bracket.
Okay, business is making $1 million,
And there are 4 people.
and there are 4 people: myself, my wife, and my 2
So
children.
everyone's on 250, 250, 250, 250.
Okay.
And everyone's paying 45, 45, 45.
Is there an income bracket? Because how would they pay 45, 45, 45? Well, we just said if you're on the trust, it would be 19%.
No. It was 19% if you made 100,000.
And below.
Not yeah. For example.
Okay.
So 100,000, if there were 4 people, you'd be paying tax on 25, 25, 25, 25.
Yeah.
But then if you make $1 million, it's 250, 250, 250, 250.
But still at the tax rate of 19%.
No. So you see, the trust doesn't pay tax.
Oh, okay. Yeah.
The profits are distributed to the individuals. And then the individuals pay tax at their rates, marginal tax rates.
Okay. But well, even if they made 250 to 50, obviously they would have gone onto the higher tax bracket. What would that be?
I think it's 45% or something like that.
What's the? Jesus Christ. Okay. What's the tax brackets?
Good question. Like the individual tax brackets, if you're a resident, 0 to 18 is 0%.
0, yeah.
Yeah, and then 18 to 45 is 16% for the year 2026. 45 to, I think it's 135,000 is 30%. And then 135 to 190 is 37%. And then anything more than 190 is 45%. Yeah.
18 to 45, 16%. 45 to 130,
5.
30%.
Correct.
35 to 190, 37%.
Yes.
190 and above is 45%. Essentially, you're being penalized to earn more.
Correct.
Why is it so?
It's a marginal tax rate. It's always been that way. The more you make, the more you pay. And I don't know if it's something fair or not fair.
You think it's fair?
I think it's fair. Because today, if you make $1,000 and you pay 19%, yeah, or if they had one standardized tax rate, you made 100,000, you pay 30%, that's 30 grand. You made $1 million, you pay 30%, that's 300 grand. Yeah, so the tax system in Australia, they're taxing you more as you earn more. Who am I to say if it's fair or not? But
So,
paying tax itself is unfair.
for salary earners,
Yeah,
can they set up a trust?
no. There are rules around it. You can't just set up a trust and get your salary paid into the trust.
Oh, how can salary earners, what's the workaround? If they can't set up a trust, what else can they do?
Not much. Some people work as subcontractors and set up a trust, but then these people, they trigger something known as personal services income.
Okay, what's that?
It's basically, in very simple terms, yeah, you are as good as an employee. You're just using another vehicle to earn income. Yeah. You work 38 hours, instead of getting paid through the payroll, they're transferring money as an invoice. This is one of the examples. Yeah. They're transferring money to you into the trust. Yeah. And if you're deemed to be seen based on the requirements and the eligibility criteria, if you're deemed to be seen as an employee, all that income will be attributed to you and you're back to square one. So now you're paying the same tax rate as you are as an employee, plus you have to pay the accountant to
Trust.
to do the financials for the trust.
Who decides who gets deemed as an employee?
So
Because if they send, from my understanding of, of course, if I work as an ABN, I don't go through the payroll system. I send an invoice, and so it's paid to Emmanuel Pty, for instance.
Yeah.
And Emmanuel Pty essentially writes an invoice to Nirav Pty, and Nirav Pty pays Emmanuel Pty for the services, whatever that services might be. And if I set up Emmanuel Pty as a trust, why wouldn't I be considered such?
So, Nirav is not your only client. You have many clients.
Yeah.
You have to be seen as running a business.
More than one client.
Yeah, that's what I try to. It's more complicated than that. But what I try to explain to my clients in simple terms is you have to be seen to be running a business. You have your own insurances. You're using your own tools. You don't just have one client, and so on.
Okay.
You see, so, and you're actively looking for
More work.
you're advertising, your services are different. You're not doing the same thing.
Okay.
Yeah. So but this is basic rules I'm telling you, but there is a whole criteria you need to meet to consider whether your personal services income or not.
Okay.
Yeah.
I'll go back to a question. This property we had, we sold it now in one of our businesses, and I know we talked about when we consulted you, when we engaged you at the time, it was set up as a company to run the property.
Correct.
And then you mentioned we would have set up as a trust.
Yeah.
And of course, you explained what the trust was. That was my first. I've heard trust, that word being used, don't really understand what it meant. But of
I'm
course,
not the one who advised you to set it up.
no, you're not the one that advised us, obviously, yes. And at the time, you said we couldn't reverse it, if I understood very well, or it was too expensive or something like that to reverse
So
it.
basically, if you did reverse it, for example, you bought the property under the company.
Yeah.
The titles, the stamp duty you paid was under the entity.
Yeah.
Now you want to remove it from the company and put it under a trust or under your name. It's like selling it to the entity. So you're paying stamp duty again.
So if we were to transfer,
Correct.
this is that word, trust from the entity we set it up as, which is a
Initially,
PTY,
yeah.
to a trust, on the books, it would look as though we're selling it to a new
Yeah,
entity.
of course.
Is that what it is?
Yes, because someone else is buying it. Even if it was Emmanuel Trust and Emmanuel
Yeah.
PTY Ltd, separate ABN, separate TFN, someone is buying it off.
Okay.
Yeah, you look at it separately. Don't look at it as if it's yours because it's a separate entity. Yeah. Then you've got one, you might have to pay stamp duty. Yeah. Because when you bought it, you probably paid stamp duty.
Yeah.
Yeah. Then you're going to sell it again to your another entity. Even if you buy it, you're going to pay stamp duty. Yeah. And then you're going to report the capital gains or any losses or profits or gains that you have made. Yeah, from selling that property. Because when you bought it, you probably bought it for 100,000. Today, it's not worth 100,000. It's worth 200,000. So you're selling it from the company to the trust at market value, which is 200,000. So now you've gained, you've made a profit on the sale of that property, even though there was no money transferred.
Okay.
Yeah. So you're paying stamp duty, you have to pay the taxes, we have to prepare your capital gains schedule, you have to pay us.
Yeah.
Yeah. So
Would that have been the case if it was to be, if you were moving this, if it was to be like a family trust, would that still be the case? So if it was a company that were transferring from a family,
still the case.
But it would be cheaper.
No, stamp duty is stamp duty. Stamp duty is paid based on the value of the property.
What I meant by that is, say same scenario, Emmanuel PTY is a company, is a trust owned by my kids and my family. Oh, sorry, it's a company, PTY Limited, with my kids as directors. They wanted to move it to a trust.
Yeah.
Would this rule still apply?
Yeah.
If there was no property in it?
There's no property.
Yeah, it's just a company that trades and buys and sells.
Yeah. So you can change it to a trust. And that is where the rollover, when I mentioned earlier, comes in.
Would that be considered as selling the company to another entity?
There are so many rules, small business concession, CGT rules, that you may be eligible for or may not, depending on the type of business and the turnover and the net asset value. A lot of things that we need to consider whether, if we roll you over from a company to a trust, do you meet these requirements to not pay any tax? Yeah. So it depends on your personal circumstances.
Thanks.
Whether you meet these rollover exemptions.
Or not.
Yeah. If you meet the exemptions, no tax, you can switch over your company your business from a company to a trust without any tax consequences.
Cool. Thanks. We've had quite an extensive conversation on that one.
You're asking me advice questions. Yeah.
These are questions that were important to me, and I believe many people have similar questions. If you run a business in this part of the world, it can be complicated.
It is complicated. The Australian tax system and the rules.
There are so many things you don't know about that can easily get you into trouble.
Yeah.
And you're losing money on a daily.
Yes.
And then the tax bills, they don't stop coming.
Yeah. It doesn't stop.
Yeah.
Time doesn't wait for anyone.
Yeah, cool. Look, I wanted to ask, what's been the most challenging part
in
running your business as a tax accountant?
Challenging part is, for me, it's to say no. I've learned to say no in terms of, one, yes, you want the work, but at the same time, you don't want the client to squeeze you in terms of your fees. You want to make sure the client is compliant, he's doing the right thing, he's on the right, so we get torn apart. Yeah, you might be a really nice guy, yeah, and you're paying me top dollar, but you don't want to go on the system because you don't want to pay that extra $10. So we have to explain to you why we want things in a certain way in order to make your life and my life easy. Another I would say challenging is staff that look at your business as their own, because you spend all these hours training them, and just like everyone wants to grow, yeah, and they move on, and then you're starting the training process and the recruitment process again. So recruitment is not cheap anymore. It's hard to get good staff. It's expensive to get good staff. So you have to manage, you have to include that in your cash flow. Yeah. So as you're growing, how much can one person handle? And at the moment, I'm struggling with that, because it's got too much work coming in, but it's no one to do it, And plus, when you get a referral, like you've sent me quite a few referrals, yeah, and if a referral comes from someone like you, I find it hard for me to say no because of the relationship we have, yeah.
So what systems have you put in place? Because I understand what you mean. Loyal staff, getting loyal staff in this part of the world is really hard. Yeah. I experience it as well. Yeah. But then the business must go on, business must grow.
Correct.
How then have you managed scaling? Because I heard from earlier conversation you're planning on buying other accounting firms. So
yeah,
what's the scale plan for you?
So my understanding is when you buy another firm, you're hoping that the staff are willing to stay. And we need to be very careful what firm we are buying, because we need to know the reason why they're selling. Because if you're making money, why sell? And then might be health issues or might be retirement. So when you want to scale, you want to make sure you have a good team. Without a good team, it's very hard. You have to be good to your employees. Your employees are the key to your business. Yeah. So when you're buying another firm, we're hoping that the owner has trusted us with the firm. That's first thing, yeah, by selling it to us. And secondly, we are hoping that the staff will stay. Otherwise, we'll have to go through the recruitment process again.
I'll go back to a response you gave, saying no. I understand, of course, the difficulty in saying no.
Yeah.
How has that impacted you? So, have you had a situation where you have to say no? You've had to say no to a customer?
Oh yeah, plenty of times, very often, in fact, because we want to be efficient. We have put all these systems and softwares in place for a reason. We want you to get part of these. We want you to be your business to be part of these systems and processes, so that we are doing our work seamlessly. When you want something from us, we don't take weeks to respond. Yeah, when you follow how we want things to be, yeah, it just makes everyone's life easy. Yeah, for example, the software you're on, yeah, and we hardly meet at the moment because we talk from the software, Xero, accounting, email, yeah, and it's seamless, yeah, because otherwise you'd have to come see me every 3 months with a bag of receipts,
Do you get that?
Yeah, we do get that, but we try and encourage the client to have some sort of system or procedure in place, because the time we take to do your job, we will bill you based on that. Yeah, and then if you bring me a bag of receipts and I have to sort it all out for you and prepare my own spreadsheets on there and so on, I'm going to charge you. Yeah, so my charges versus the software charges, yeah, I will explain them to you. And then you'll be like, yeah, okay, no problem, put me on the system. And I will teach you how to use the system. And if you don't have time or don't know how to use the system, yeah, we can handle the bookkeeping side of it, which will be probably even cheaper and faster to do it that way than to do it manually with all your bag of receipts. So it is challenging. Every client has a different challenge. Every client wants things differently. So fortunately, we are in a position to somewhat meet their needs. And if we can't, we will point them to the right direction.
Thanks. If you were to teach, one principle about money that never get taught at school, what would that be?
Money loses value as days go by because of inflation and all this. I would say you would invest in like index funds and properties just to increase the value of your money. People use index funds, properties, fixed deposits to earn interest and so on. But money, it comes and goes. Yeah, if you do the right thing, it will come.
What attitude should we have about money?
It's important, but it's not everything. It's not everything. Everybody have their own soft points, trigger points in their personal life. Everyone is built different. So some people, family is important, children are important, parents are important. I would say it's not everything. It's important, but it's not everything.
Your dad, has he been to Australia before?
Yeah, my dad has been to Australia, I think.
Has he been to your business?
No, he has not been to my business.
Any reason for that?
He's busy. He's got his own.
Have you had a chat with him about your business and what he thinks about you running your show here and not wanting to come back to run his show over there?
I haven't spoken to him, but in fact, I asked him how he started. What was his mindset?
Okay, I'd like to hear that.
When he started, and weren't you scared? What were your circumstances at the time when he started? So he told me everything, and I was like, yeah, it's pretty brave, like someone like myself. It looks like I have had a head start compared to what he had. So, no, he has not seen what I do or how I do, but on a regular basis, I try and explain to him what we're doing, what we're trying to achieve, how we do things. And now I also, when any questions he has about his business, I review his financials from here. I liaise with his accountant from here. So
it's part of what you've done?
Yeah. Yeah. So the tax laws and the accounting standards are similar. It's worldwide. It's almost the same. Yeah, only the tax rates are different, or some perks here and there. So, in terms of accounting,
Practice, yeah.
it's the same. Yeah,
Profit, loss.
yeah. Where does it go
Yeah,
in the
same
books?
thing,
Yeah. So, yeah, it's a good one. But no, I've never mentioned it to him how it works.
If you were to start afresh today, what would you do differently?
It'll be hard. It'll be very hard.
In what sense?
Because I reckon when you're young and you have the drive, you push. But then now you have a lot of things to consider. Family, health. As you grow older, you've got other priorities. What would I do different? I'll take the experience of what I've learned over the time and the mistakes I've made, and the soft skills I've learned over the past to make the next one a better one, a bulletproof one.
What mistakes?
Mostly like in my industry, like initially, like we spent so much in marketing and this was basically our savings we had. Yeah. We put it to marketing and it didn't work because it's a personal touch business. We are your trusted advisor. You're trusting us with all your finances. Yeah. It's hard for you to just Google an accountant.
Yeah.
And just walk in. Yeah, you've got all the reviews nowadays, and they help because they specifically mention, "Oh, Nirav helped me to do this. He's a good accountant," so that helps. But you're not going to just give all your trust on someone you don't know. So it's a referral-based, word-of-mouth-based business that we have built today.
What's your customer base strength numbers? How many customers?
It's not about the numbers.
No, it's not. Obviously, it's not about the numbers.
It's because you could have 1,000 clients, but if you're only charging $100, you're not making that much money. Or you may be, but you're probably pushing hard, or you have more than one or two staff. I would say ballpark figure. I've never looked at it. I would say around 300 clients, 300 to 400 clients, business clients, and I would say another 300 to 400 individual tax return clients.
How has this impacted your health? So I'll give you an instance, okay? So last year, one of our businesses, we actually had to shut down, and it really impacted. It did impact me, of course, financially, and health-wise as well. Where I saw myself actually had to go see a doctor.
Yeah.
All right. Oftentimes, these things are not things we speak a lot about.
Yeah.
But in trying to build a business, essentially, it's like you're trying to raise a baby. Give everything to it so it survives. And then giving everything, sometimes it could be at the detriment of your own
health,
physical and mental well-being. Can you speak to that?
It's hard sometimes because the type of business we are in, it's hard to switch off. And falling asleep at night is hard as well. And then you've got the time constraint where your family needs you now, your children need you now, your work needs you now, your health needs you now. So we have to manage. It's hard to manage. Yeah, I'll be honest. Like I struggle to manage everything.
Have you seen a therapy?
No.
Don't think you need one?
Uh, I don't know how it works, how a therapy works. I've never seen one. I have no understanding of how
It would help.
they would help. But I would suggest you have to learn how to switch off. Yeah, like it's not easy. You have to learn how to switch off. Once you leave the door,
Do the business in there.
yeah, you go, yeah. But it's hard. Like I struggle to sleep sometimes. Sometimes 4 hours sleep. But then now my body's used to that.
Is that a good thing?
I don't know. I don't know. Yeah. It's no, it's not a good thing. You need your sleep. You need your health
The price you have to pay
to run
build
a
something
business. Yeah.
meaningful. I think it cuts across everywhere. Got a
Yeah.
price to pay.
Yeah.
Yeah. Nirav, thank you
No
so much for coming on this podcast. I know we've spoken a lot. I've taken you off balance, I know.
Yeah. You have taken me off balance.
Yeah, but it's a good one. You didn't fall. You did well. So there's a question for you that I would like to ask you. What is the most important value in your life and why?
Value in my life. I think about it every day. My parents. I've seen them work hard. I've seen what they've done. I've seen, and if it wasn't for them, we wouldn't be here. If it wasn't for their help or sacrifices, and not even what's the word? The encouragement. Yeah. Unfortunately, they're far, but then I work hard to be able to visit them every year. And yeah, at the end of the day, my goal is to like stay with them, be with them, you know. That is that's where I see value. Yeah.
Thanks. It's quite very deep.
Yeah.
It's very deep. Thank you. Once again, Nirav, thank you so much for joining me on the Becoming a CEO podcast. I hope you had as much fun as I did.
Yeah. Thank you.
Yeah.
Thank you for inviting me here, Emmanuel. It was the first time to be on a podcast and to be actually speaking in one. Very eye-opening. Even the questions you are asking have triggered a lot of things in my head. Yeah, thank you. It was good.
Thank you so much. Thanks. I do look forward to having you again, hopefully.
Sure.
And then we'll dive deeper into a number of, a few other things.
Next time you can call Durgesh as well.
Durgesh? Okay.
We can both be here as well.
Oh, good. It's going to be a blast. All right, guys. Thanks so much. Have a wonderful day.
All
Bye.
right. Thank you.
Yeah.